This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Holiday home stretch. The last-minute push for gifts is giving brick-and-mortar stores an advantage over online retailers during one of the busiest shopping days of the year. California leaving? Why some residents are thinking about moving out of the largest U.S. state economy. And bogus Bordeaux, about to crack open a bottle of wine for the holidays? Be careful, it might be a fake. Those stories and more tonight on Nightly Business Report for Friday, December 22nd. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. It is one of the most important times of the year for the retail sector, and this weekend is likely one of the most critical for brick-and-mortar stores. With the last-minute push to buy gifts, many will be heading out to the malls or local shops for fear that packages won't be delivered on time. In fact, tomorrow is Super Saturday, one of the busiest shopping days of the year, and it falls at the tail end of the holiday season, in which most retailers earn a sizable chunk of their annual sales. Courtney Reagan caught up with some last-minute shoppers at the Queens Center Mall in Elmhurst, New York.
If you haven't checked off your Christmas list yet, you are far from alone.
I just started because I work all the time, so today's my first day of shopping. I'm not even close to being done. I'm stressed.
None of it's done. We're just getting started, and I have 2 days to finish it.
Half of U.S. consumers are expected to hit the stores in the final hours before Christmas. That's actually down from last year, largely because consumers took advantage of deals starting early in November.
My holiday shopping has been pretty okay, except for those few hard last-minute people. So here I am.
Because when you come to the mall last minute, everything, the prices go up and, you have to spend a lot more money.
Tomorrow is expected to be the second busiest day of the year for stores. So far today at the Queens Center Mall, traffic has been picking up as the hours have worn on. Tomorrow, the mall is opening at 8 a.m. and stores are staying open for 35 straight hours. The last Saturday before Christmas is always critical, nicknamed Super Saturday, and it's even more important for last-minute shoppers this year. With Christmas falling on a Monday, shipping deadlines were earlier, which means procrastinators need to finish up in stores.
I started a week ago. Today is my second day continuing my shopping, and I think I'm gonna go tomorrow again.
First data says holiday sales are up more than 6.5% since November 1st. Couple an already strong season with the last-minute rush, and analysts are upping their optimistic forecasts going into the final shopping weekend.
Today and tomorrow are key times for the holiday season, and typically 40% of holiday sales occurs between December 15th and the 25th. So today and tomorrow are outliers in terms of their importance and significance.
I think I need some adrenaline, like last minute gives me some adrenaline, and this is what motivates me to do the shopping, yeah.
Nothing like the adrenaline of a ticking clock. For Nightly Business Report, I'm Courtney Reagan in Elmhurst, New York.
And today we learned that Americans spent more and saved less in November, and some economists are interpreting the latest report from the government as a sign that the holiday spending season is strong. And as for those who made purchases online, deliveries appear to be running smoothly. Morgan Brennan has a report card on the shippers.
Combined, UPS and FedEx expect to deliver more than 1 billion packages between Thanksgiving and year's end. And historically, this week is the busiest. Add in the U.S. Postal Service's 850 million packages, and the numbers are extraordinary. So how is it all going? Well, based on third-party data from ShipMatrix, pretty well. On-time performance for FedEx Ground last week was 98%. For UPS Ground, over 97%, after some earlier service hiccups after Thanksgiving. And ShipMatrix notes preliminary results for this week show both are performing even better. UPS says demand for its services, quote, remains very strong. We have returned to our original peak operating plan and normal delivery time in transit after the initial Cyber Week surge that exceeded our operating plans. For FedEx, CEO Fred Smith saying earlier this week, quote, FedEx is on track for another record holiday shipping season. From a service standpoint, so far, the company calls it the best peak season ever. As for the Postal Service, last mile delivery, which Amazon uses heavily, has been on time 99% of the time, and volumes have been higher than expected. For each of the Sundays in December, the government agency forecast 6 million package deliveries. This past Sunday, it delivered 10.5 million. But while the cost to deliver all of those shipments won't be known until earnings, overall, operations do seem to be going as planned. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
Well, with this year's holiday shopping season almost in the books, we're looking ahead to 2018. What might the retail environment look like and what trends could we expect to see? Here to share some thoughts with us tonight is Tom Bleichach. He's chairman and CEO of the Dialogic Group. Welcome, Tom. Nice to have you here.
Great to be with you, Sue, and Merry Christmas.
Merry Christmas to you as well, and a great New Year. You know, it seems as though 2017 for the retailers was one, a very tough one, and two, one of disruption. Does that continue into 2018?
Oh, absolutely, yes. I think some of the changes we're seeing with people like Walmart buying Jet.com, Target buying Shipt, we're moving into a different kind of retailing environment where retailers are going to buy capabilities. So you can expect the disruption to continue well into 2018. By the way, also driven by shoppers who are moving more and more online.
You know, do you expect that this particular shopping season, as we finish out 2017, will be strong? That's what we're hearing anyway. What are you hearing?
Yeah, I'm seeing a very strong shopping season, buoyed by both online as well as in store. And I do believe that there will be a fairly interesting day tomorrow as shoppers rush to the store because the deals. I was in stores last night and earlier today. You know, 90% off, 70% off.
Wow.
So this is a tremendous time to buy for the holiday season.
Now, what about shopping in 2018? You mentioned the kind of migration to online. I would assume that that is going to grow exponentially.
Yeah, I would project that we would see this year online grew about 14 to 16%. I would say next year we're going to see in the mid-20s. America has found that convenience shopping on online, whether it be from the couch or the office or the home, has actually been something that they like a lot. Easy, expert, and fair.
Now, in terms of value and in terms of pricing, you mentioned what you saw today. Once the consumer gets used to those kinds of deals, they tend to wait longer. Will 2018 continue the discounting or the pressure on the stores to continue discounting?
Absolutely, yes. I mean, we have total price transparency. I was in probably 300 different outlets, stores this year, and I saw more smartphones than I've ever seen, people checking prices. So what's going to happen next year is that this issue of price transparency becomes even more real. Retailers are going to have to deal with how they serve those shoppers, same with manufacturers.
What about the tax reform package? The administration saying it will give people more money in their pockets. They may see it as soon as perhaps February. What's the psychological impact for those who do see a little bit more in that paycheck? Do they spend it, do you think?
Well, I think so, and I think we're already seeing it. You know, in chatting with a bunch of shoppers this morning after the tax package passed, they said, well, we're going to buy one more gift. I would expect that we would see some more spending next year, probably more for things like home appliances, updating the home, updating the car, updating clothes. It's been a long time since people have had this level of euphoria.
On that note, have a wonderful Christmas and a great New Year, Tom. Appreciate it.
You too.
Tom Bleichach with the Dialogic Group. On Wall Street, meanwhile, stocks pulled back just a little bit ahead of the long holiday weekend. The markets are closed for Christmas on Monday. Today, the Dow Jones Industrial Average fell 28 points to 24,754. The Nasdaq was off 5, and the S&P 500 lost 1 point. For the week, the Dow and the S&P posted a 5-week win streak. Now, this is also the start of the so-called Santa Claus rally, but will Santa be coming to Wall Street this year? Bob Pisani is at the New York Stock Exchange.
Today marked the start of the so-called Santa Claus rally period. That's been viewed as an old Wall Street indicator of market performance in the year to come. The Santa Claus rally refers to the tendency of the markets to rise in the last 5 trading days in December, plus the first 2 trading days in January. It's been good for an average gain of 1.4% in those 7 trading days over many decades. The failure to rise is thought to indicate the start of a bear market or at least some kind of pause later in the year. But some traders are saying, bah, humbug, after the year's already half the gains. The Dow and the S&P and the Nasdaq have all surged 20% or more in 2017, and 5% of those gains came in just the last 5 weeks. So we've got a tax bill and a government spending bill done, and in the absence of other catalysts, investors could be looking for excuses to sell. UBS's Art Cashin, though, believes Santa Claus could be on his way with a little help from banks and industrials, sectors that would reap the biggest benefits from corporate tax cuts. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Purchases of new homes unexpectedly surged to the highest level since before the Great Recession. The latest report from the Commerce Department shows that demand for new construction remains strong across the country. Sales of single-family homes soared 17.5% in November, and the number of properties sold in which construction had not yet started increased more than 40%, indicating that builders will stay busy in the months ahead. There are also signs that demand is improving for long-lasting manufactured goods. Durable goods orders increased 1.3% from the prior month, helped by purchases of airlines, cars, and military equipment. Meantime, at the White House, the president signed into law the most consequential tax bill in decades. As you know, that legislation sharply cuts corporate taxes, and today the president said it includes something for everyone.
I consider this very much a bill for the middle class and a bill for jobs. And jobs are produced through companies and corporations, and you see that happening. Corporations are literally going wild over this, I think even beyond my expectations.
The president also signed the continuing resolution, which will keep the government open through mid-January. And with the tax bill now the law of the land, how will it change California, the country's largest state economy? Jane Wells reports tonight from Long Beach.
Instead of California dreaming, more taxpayers are California leaving.
California's outward migration has been increasing over the last few years, and the tax bill could make it worse.
105,000 more people moved out of California than moved in last year, according to state realtors. That's 3 times more than 5 years ago.
My next opportunity, my next career step, I'm looking elsewhere.
26-year-old Michael Hutton is a marketing associate in L.A. His 61-year-old mom, Sandy, is a retired executive in Long Beach. Both will move in 2018. Taxes are killing her, and he can't afford to buy a house. They're debating whether to move to Texas or Florida.
They are growing states with excellent infrastructure, tax-friendly.
I could get a 2-bedroom, 1-bed house in Tampa for $120,000. My mortgage is less than my rent was in Van Nuys.
Most Californians will see their tax bills go down because they don't itemize. But this state has always had an exaggerated dependence on higher income earners who do itemize. They deduct their sky-high state income taxes and they have really large mortgages. And one study suggests 2 million of those Californians will see their tax bills go up. At the same time, though, the state's tech giants will see their corporate taxes go down, which means they might invest and expand, though maybe not here.
If you take a look at where Apple and Google are growing, outside of the Bay Area, it's not in the rest of California. It's to Boulder, it's to Austin, it's to Salt Lake City.
California's economy has grown more quickly than the rest of the nation since the recession. But an economic forecast from California Lutheran University says its so-called growth premium will virtually disappear by 2019. And the Golden State's loss will be another state's gain.
There are parts of California that just feed my soul, but I can always come back.
Sandy Fitch Hutton says profits from selling her home mean she can come back whenever she wants, as a visitor. For Nightly Business Report, Jane Wells, Long Beach, California.
And still ahead, looking for some stocks that could benefit from that tax bill? Our Market Monitor has some investment ideas for you. Apple is facing some lawsuits over its policy of slowing down older iPhones. As we reported, Apple admitted to the practice but says slowing things down helps the battery life on older models. Now 2 class action suits have been filed. One describes the practice as deceptive, immoral, and unethical. The other lawsuit alleges that the practice harms users who did not agree to it. Eric Schmidt is stepping down as the executive chairman of Google's parent, Alphabet. Schmidt joined Google in 2001, and he helped take the company public in 2004 and played a critical role in growing that company into something more than just a search engine. Schmidt will relinquish his role at the company's next board meeting in January, but will continue to be a member of the board and a technical advisor. Papa John's founder is also stepping down as CEO, but John Schachner will remain chairman of the company. Papa John's has been in the headlines, as you may recall recently. The CEO criticized the NFL publicly last month for not resolving the anthem issue and blamed declining pro football viewership on a drop in its sales. Papa John's is a sponsor of the National Football League. There is also a change at the top of CSX, the third largest railroad, named Jim Foote chief executive, succeeding veteran industry turnaround expert Hunter Harrison. Harrison died suddenly last week, just months into the company's ambitious turnaround plan. CSX's board said it is confident in Foote's ability to lead the railroad. Home Depot is reportedly eyeing logistics services company XPO as a takeover target. That's where we begin tonight's market focus. According to Recode, Home Depot has been in talks with XPO in recent months regarding a potential merger. The report says if Home Depot does make an offer, it will be because it wants to keep that transportation and delivery company out of the hands of Amazon. Shares of XPO jumped 14% to 90.01. Swiss drug maker Roche is buying the cancer treatment maker Ignita for nearly $2 billion. The deal will expand Roche's oncology portfolio, giving it control over gene therapy treatments that are in early development. Ignita shares soared 72% to $26.85. And Amazon is expanding its lineup of in-home devices with its latest deal to buy security camera and smart doorbell maker Blink. Amazon bought the startup for an undisclosed amount. The deal appears to be complementary to Amazon's existing service for its Prime members, which lets delivery personnel walk right into the home to drop off packages. Amazon shares were off just a fraction to $1,168.36. And United Health Group says it has signed a definitive agreement to buy Chilean healthcare company Banmédica for about $3 billion as the insurer looks to expand its presence in South America. United Health Group shares were off just a fraction to 220 even. Time now for our weekly market monitor, who has 3 value picks he says will benefit from tax reform. It's his first time on the program, so we are going to welcome Ernesto Ramos with BMO Global Asset Management. Ernesto, welcome. Nice to have you here.
Thank you, Sue, and happy holidays to you and our viewers.
Yes, absolutely. You basically favor right now value over growth because of valuation concerns in the market, correct?
Well, that and other reasons. The tax reform will have a huge impact on U.S. growth. We think, conservatively speaking, it's going to add close to 1% to GDP growth over the next few years. So that favors the value sectors because they are more cyclical. Financials, energy, materials, industrials are more the value stocks, whereas technology, utilities, real estate, et cetera, are most on the growth side, and those are not as favored by tax reform. So that's one of the reasons we like value stocks right now over growth.
Well, let's get right to your picks. Valero, the symbol is VLO. It trades at 18 times, and it has a dividend of better than 3%.
Exactly. And when you combine the valuation plus the dividend, it really is a company that is very attractive, especially when you compare it to Treasury yields at 2.4% or 2.5%. The story with Valero is very simple. They used to be very focused on growth and growing capacity, and now they've turned their focus to very much a cash flow story and a very disciplined approach to spending capital, and the market has loved that, and that's why the stock has done what it's done over the recent past. So that it's a story of becoming much more disciplined in the way they spend money and returning even more money to shareholders.
Let's go to your next pick, which is Bank of America, BAC. You said you bought it after the president won in the election, and you say it scores in the top 20% of the universe. Interesting.
Well, so we have a very complex scoring system. We score 10,000 stocks worldwide, 4,000 alone in the U.S. at BMO Global Asset Management. The key with Bank of America, it benefits from a few trends. First of all, it benefits, it's a 30% effective tax rate. That's going to go down, of course, with the tax reform. It's also benefiting from deregulation of the financial sector, of course, and it's benefiting from the fact that they've become much more conservative in their approach to lending. Their mix is now much better at 50% retail and 50% commercial, and they're returning an additional $5 billion on top of the $13 billion of capital to shareholders over the next 12 months. So it's a great capital return story like Valero in that respect.
All right. Last pick is Walmart, which is perfect for this time of year. And you say it actually scores in the top 12% of BMO's universe.
Yes, and Walmart is not as cheap as the other two. It's about 22 times. But Walmart is pretty much the leader or the most effective competitor to online retail amongst the brick and mortars because they've expanded their online presence. Just in the last 12 months, their online sales grew 50%, and they're really the only ones that are competing with Amazon effectively. They've introduced free shipping, free 2-day shipping in orders over $35 to compete with Prime. And with the acquisition of Jet.com, they acquired the technical knowledge and management to effectively run their online presence.
We have to leave it there. Ernesto, thank you so much for joining us. Ernesto Ramos with BMO Global Asset Management. Despite the big rally in the market this year, not all stocks participated. Dominic Chu takes a look at those that were left behind.
This is the time of year when we take stock about the market and figure out which of the stocks in the market have been cast out, kind of like the land of misfit toys, except now we're talking about the land of misfit stocks. So as the markets have run towards record highs, some of these sectors have gone along with them. Check out what's happened with financials, multi-year highs for that sector, but underperformers, stocks that have been left behind, ditched. XL Group, 6% to the downside, AIG, 8% to the downside, and Navient, 20% to the downside. Financials that have not participated, misfit stocks. Also check out what's happening with technology, the biggest sector out there. Some of the stocks we're focusing on here, take a look at this. F5 Networks, down 8% so far this year to date. IBM, Big Blue, down 9%, and Western Union, down 11%. Tech stocks that have missed out on that rally, misfit stocks. And then check out what's happening with discretionary. It is the retail season, which means we are focusing on those consumer discretionary stocks, also near record highs as a sector, but Signet Jewelers down 41% year to date. Mattel, the toy maker, 43% downside, and Under Armour, the athletic apparel giant, 47% to the downside. Very interesting story when it comes to winners and losers here, but some of these stocks may either be due for a bounce next year, or do investors think that downside continues? For Nightly Business Report, I'm Dominic Chu.
Coming up, before you raise a glass this holiday, make sure the wine that you're drinking isn't a fake. As you crack open that bottle of wine to celebrate the holidays, do you really know what's inside? Experts say wine is one of the luxury markets that's rife with fraud. And it's not just the vintage collections. Andrea Day reports on the faux Bordeaux.
If I were a counterfeiter of something, I would pick wine.
Meet Peter Hellman, best-selling author and wine expert.
Upwards of 20% of the time, you may be drinking a fake and probably will never know it.
It's a multi-billion-dollar business. Just one man, Rudy Kurniawan, raked in millions hawking fake wine, even duping billionaires.
Now, he was a very good counterfeiter.
He's currently serving a 10-year sentence, but his case helped expose the dirty truth that collectors and auction houses don't like to discuss. And years later, experts say counterfeiters are still in the game.
People have forgotten. New wealthy people are moving into the market.
Just last month, Chinese police seized thousands of bottles in a fake wine scam. According to Hellman, it's one of the easiest luxury goods to recreate.
It's not like a Rolex. You can't take it apart and say, oh, this is not a Rolex. You cannot prove that a wine in a bottle came from a particular vineyard in France. It's in the taste that you know the difference.
And he says the phony bottles are often just recycled.
They will simply, very quietly, resell it in the auction market. This happens over and over again.
And it's not just rare vintages being sold at auction or through high-end dealers.
The mass-produced wines, which are faked, yeah, they show up in your store.
How easy is it to catch these cheaters?
Almost impossible to catch them. Almost impossible.
Bill and Annie Edgerton are in the business of weeding out frauds. The father-daughter team typically hired when someone thinks they have a fake and want an expert opinion.
Do you know of major collectors right now who have counterfeits in their collection?
Yes, probably hundreds.
But they're not revealing any secrets.
Not without a lawsuit.
To spot a bogus wine, they say some of the best clues are on the label.
If you weren't able to feel it, it's very rough because it was glued on the bottle.
And this one looks like it's been sitting in a cellar for years, but
it was printed on the label to make it look like it was dirty. If you take some cleanser to this and try to take it off, it won't come off.
all of these magnums found in an investor's collection after he tried to sell them a decade later.
And the person he bought them from wouldn't take them back. And the reason they wouldn't take them back was that everybody knew they were counterfeit except the investor.
So what can you do?
If you're buying very expensive wine, you need to know the provenance of that wine. Where did it come from? And if the dealer can't show you that sales receipt, that provenance, don't buy it.
And his bottom line, all bottles look the same. You can't know how it tastes until you open it. That's why buying from someone you trust and asking all the right questions is key, even at the local wine store. For Nightly Business Report, I'm Andrea Day.
And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend, everyone. Merry Christmas. We'll see you Monday for a special edition of Nightly Business Report.